This conference will now be recorded.
Good evening, ladies and gentlemen. This is Clueless A Trading Frank. It's approximately 9:11 p.m. on an absolutely horrendously gorgeous, beautiful evening here on the East Coast, on the waterfront overlooking New York City, on the Jersey side in Jersey City. Welcome. It is 9:12 p.m. on the 23rd of June, 2019. Lo and behold, half the year's over, more than half the year's over. And the end of the second quarter is looming in a couple of days. The end of the month is June 28th. That's the end of the second quarter for US financial companies, or US fiscal quarter. And so it's going to be, I think it's going to be a strong finish. I've said that before. I'm sticking by it. It's going to be a very critical week coming up. Obviously, we're going to see some lumpy trading, but I think it's going to finish very strong. On that note, let us begin the session. Full disclosure, this is purely for financial education, not for any solicitation or advice. These webinars, as you know, done 2 or 3 times a week, are recorded, uploaded to the Google YouTube channel for viewing by all members and free trial subscribers, as well as anyone out there with the internet connection who'd like to avail themselves of the resources, these fantastic, absolutely, in most of the cases, very, very accurate market forecasts, stock forecasts that are presented, and you can certainly access them, get excited, make some money, and join us here at Clueless 8 Trading. So we encourage everyone to do that. We also have a terrific Instagram channel where we highlight a few of our trades at the end of each evening on trading days, and highly suggest that all members follow us there at Clueless 8 Trading. Cost you Clueless 8 Trading on Instagram wouldn't cost you a penny, increases our follower count, very importantly, increases our exposure out there in the social media world, and it is a fantastic resource to look back at trades that you might have taken, suggestions that I've made, and the option charts are put there. Okay, on that note, well, let us begin. So I'm going to start off by going into, well, a couple of broader points. Look, everything I've talked about over the past couple of weeks, over the past couple of months, more so the past couple of weeks, and have come out exactly as well as I've said. It's pretty scary. Then you can make that we can sit here and look at these tactical forecasts that I have projected, and that they come within literally points of what the markets basically hit those exact levels, give or take a couple of points. This is accuracy. This is sniper accuracy. Like, taking the bad guys out from 3 miles out. The more I do it, the better I get. Everything in life is hard work, constant learning, and constantly trying to perfect the mistakes and not repeat the same thing that we have done before. So that is my motto. I try my best, and I think I'm delivering a very fine product here at Clueless A Trading through my tactical trade alerts, my charts, my quick news analysis, these video broadcasts, which are extremely powerful and accurate. And I know many of you are onto it by now. I know that for a fact. And I hope you all are doing well. And even if you haven't had a chance to do well because of all the mental deficiencies that we all have, some of you have more emotional craters in your head because of previous baggage, because of constant fear, because of volatility, and all kinds of stuff, or whatever that might go through your head. You still have a chance, because every day in the market, and I mean that, is a day to make money. Good, bad, or ugly markets. Doesn't mean your P&L is going to be green every day, but there's a chance to make money every single day. That's the attitude you got to go under. Go into the market every single day. Okay, that's it. So I encourage everyone to become more of a tactical trader, less of an emotional trader. You know the results of that. It's a very, very successful, profitable result when you stick to the charts, understand it, use them as a constant tool to minimize your losses and maximize your gains. That's really what charts are all about, and become more of a robotic trader. Emotions are always going to be there. It's real money we're playing with. We're not paper trading here. And I'm doing this on a serious way to provide food on the table for my family. So I'm taking it very seriously. When I'm as a professional trader, I'm writing my own paychecks, using my profits from my trading. The service is an ancillary product, which I spend a lot of time and energy trying to help and motivate and teach my members. But that's not my main source of income. If that was my main source of income, trust me, I would be in pretty dire straits. So saying all that, let's just put it this way. We want the community to grow. I always encourage referrals. I always ask you all to go out there, put out the good word, bring in some friends, let them try us out, let them work with me, let them go through all the resources that we have, and then they stay or they don't stay. It's a free country. You come and go. But we are doing well. We are growing slowly. We're not accelerating. I'd like the acceleration phase to start and the number of members to grow. There are always fickle members who get swayed by the markets. Say, oh, this stuff won't work. Your stuff, you don't know what you're talking about. Okay, great. I don't know what I'm talking about, but I'm delivering the results right, left, and center 80, 70 to 90% of the time. And I said the markets were going to go to a new high. They went to a new high. The markets are still going to go to a new high, in my opinion. Okay, and in the meantime, this is not just a story at Clueless Aid Trading, talking about a little bit of behavioral finance here. This is before we get into what's coming up this week, but this is a story of the overall market. The amount of somebody asked me over the weekend, somebody I know, hey, why is this market going nuts? There's so much stuff going on. I said, I'll tell you a simple reason. Markets go up because money goes in, money goes out. There is so much money sitting on the sideline, more than $6 trillion in institutional accounts. And mom and pop, forget it. That included. I mean, there's trillions of dollars sitting on the sidelines. The so-called smart money is underinvested, i.e., doesn't own enough of the U.S. stock markets. Pension funds are struggling to increase. They're so underexposed to individual stocks. They are sitting in bonds. Okay, it's scary. So when there is so much money sitting on the sidelines, companies are doing their buybacks, delivering some very good results and everything. That money has to come into the market at some point. Parts of the money that come back into the market, look at it, we're at new highs. You don't need President Trump, who's doing a terrific job on the U.S. economy, and then working through the nuances of this pretty tough trade war to tell you that the markets are going to make new highs. He's doing it for political reasons. We are telling you for technical reasons. I am a tactical bull with always an eye behind me to make sure that the bears are not charging in the back to take everything away from us. And there have been time pockets where it looked like the market was going to break just in the past couple of weeks. And I have walked you all through it. So saying all that, stay determined, keep on learning, keep on using my charts and all other resources that provide as very powerful tools. If you have issues and stuff, I'm always available to speak to you within reason. And let's move on. Let's just do it. Believe in America, believe in U.S. companies, believe in the fact that U.S. business is a major reason what makes America great again, to be honest with you. And despite all the difficulties and everything, we're going to move forward. We're going to move forward. And we're going to have 1,000-point drops. So get ready for that. All right? That's just the nature of the beast. But the long-term picture, as we're going to go through the technicals, is a bull market still intact. End of story. How about that? Period. Okay. Now, let's go into next week. There's a lot of other stuff. Very most importantly, this week, President Trump, end of the week, will be meeting President Xi at the sidelines or for dinner at the G-20 meeting, Osaka, Japan. You are going to have Federal Chairman Jerome Powell speaking on Tuesday. I'll show you that right there, Tuesday at 1 p.m. So that's going to be a market-moving event. But primarily, the biggest focus this week is going to be on President Trump and President Xi. Deal or no deal, let's put it this way. Even if it's the framework of a possible deal, the markets are going to like it. It's not like just black and white, I know. So, and if there's a complete, what do you call, fist fight and what am I looking for? I'm missing the term, or a schoolyard, a fight between Xi and President Trump. Well, that's the market's not going to like it at all. So, so we will see. But that's the main focus this week. End the story. So let's move on. So Monday starts off tomorrow, 24th, and we have the Chicago Fed National Activity Index, not that important, at 8:30. Dallas Fed Manufacturing some important at 10:30 a.m. And then you have the regular a monthly auction, 3-month bill, and the 6-month bill auction, somewhat important coming up. These are the coming up to see the demand for U.S. debt out there. So that's tomorrow's thing. So nothing that critical, but these two are important. Gives us a little bit of a temperature on the manufacturing side of the U.S. economy. Then we have Fed Governor John Williams speaking at 8:45 a.m. His comments will have some impact on the markets. We already know what the Fed wants to do. Fed wants to sit back, not raise rates too much, possibly cut rates in July. Most important thing about the Fed meeting, if somebody asked you, hey, you're a trader, you understand what's going to Fed's doing. It's a very simple thing. The Fed is your friend. Jerome Powell is a good guy. He's not a bad guy, okay? He's a disciplined guy, and he's doing what needs to be done. And the biggest thing that was messaged from the Fed press conference on last week was that after the Fed meeting was that he is going to let the U.S. economy expansion continue without slamming the brakes. In other words, he doesn't need to slam the brakes, meaning he doesn't need to raise interest rates like a crazy maniac just because inflation ticked up 0.5% or something like that. Not 0.5%, like picked up 0.05% or 0.1%. So he's not going to slam the brakes on the U.S. economy and bring it to a screeching halt, the expansion, just because inflation and other factors are moving up a little bit, because that's by the playbook. That's what they're supposed to do. So bottom line is he's going to let the U.S. economy run hot a little bit. In other words, keep on growing, let inflation creep up a little bit more, and rates and possibly cut rates or just leave rates the way they are and let the U.S. economy expand. That's it. Now, the markets will interpret in many different ways because the markets like drama. The markets are all about soap opera and drama. That's what we call volatility. And then you're going to hear some comments out of President Trump because he obviously wants lower and lower interest rates. But lower interest rates are not necessarily good. I talked about it before in my previous webinars, and I don't want to talk about it right now because that's an in-depth topic. Okay? Low interest rates means there's low demand for money. Is that good? I mean, come on. That means the U.S. economy is struggling. The U.S. economy is not struggling. Yes, things are starting to slow down. If we don't get a deal with China, the global economy will take a hit. At that point, they'll cut rates. So that's a reason to cut rates. But aside from that, an expansionary economy doesn't require cutting rates. End of story. Let's move on. So you got John Williams speaking. Blah blah blah. What is it? House price index? Yeah, it's somewhat important with the health of the U.S. economy. One of the biggest pillars is new home sales. That's at 10 a.m. on Tuesday. So we're going to keep an eye on that. Consumer confidence, very important number. Why? Because more than 70% of the U.S. GDP or gross domestic product, or the output, the value of all the goods that are produced in the United States of America, is consumer spending. You and me going out there and buying something out there. Consumer spending. If the consumer slows down and consumer confidence basically pulls back, the market doesn't like it. But the first sector that gets hit, retail, because that's what they spend, right? So bottom line is very important number. That's at 10 a.m. on Tuesday. Richmond Fed Manufacturing Index, somewhat important. Then you have the bond sales to see the demand for U.S. debt out there. And then Jerome Powell speaks. So this is very important. 1 p.m. Tuesday. 1 p.m. Tuesday. James Bullard, another major Fed governor, speaks at 6:30 p.m. So Tuesday, lots of Fed people speaking. It's a very important day on Tuesday. Now, Wednesday, you got mortgage applications, important durable goods order, very important to see the sustained delivery demand for long-standing durable goods, autos, fridges, all things that last more than 2, 3, 4 years, durable goods. Look up the definition on Investopedia. That's at 8:30 a.m. International trade in goods, I don't care about that. Yeah, it's important. Retail inventories, important. Not that important. Wholesale inventories, yeah, half-half. Petroleum status report, I don't really care about that much. Then you have the bonds. Okay, Thursday, very important day. So you got a very important day on Tuesday, and you got I'm giving you the economic backdrop of what the big catalysts in the markets are going to be, aside from the G-20 stuff. So you got the gross domestic product, just what I talked about a few minutes ago. Thursday morning, let's look at the gross domestic product. I believe this is for the second quarter final GDP, if I'm correct, because I think we got the preliminary one already. So this is important. It's very important. U.S. economy humming along. We're going to love it. U.S. economy slowing down too much. The market's going to drop a little bit. We're still going to love it. Why? I just told you. They're going to cut rates. And the markets love cutting rates. Lower, interest, debt cost. Stocks love it. Look at what I told you. Look at what happened with the market. They shut up. We shut up like what? They opened up 20-some point handles the day after rallying on the day of the Fed. Wednesday was the Fed meeting. Thursday was the big ramp up. All right. I know all of you are learning, students of the market. This is not rocket science. I'm telling you stuff. Just absorb it, understand it, use your own feeling, and just make it happen. All right. Jobless claims, important. This is the most important part. This takes precedence over anything. GDP number. Then you have all this other stuff. Kansas City Fed Manufacturing Index, important. The Dallas one is more important. That is on Monday. And then you have the bond stuff. This is important because we want to see the demand for our debt out there. And then you have these are important, but really not talked about that much. Then you have Friday. Personal income, very important. Very important. Personal income at 8:30. Chicago PMI, very important number. Get used to this one. Purchasing Managers Index, the cost. What are the purchasing managers of all these U.S. businesses doing? As in, how much are they paying up for? It's an inflationary number. They measures inflation on the finished goods side, as in on the raw goods side, as in how much are they paying up for raw materials to produce the goods. So that's the Chicago PMI. Consumer sentiment, very important. That's it. So that's your economic picture for the week. So get ready for it. And we're always little twist and turn during each one of them. Most important, Jerome Powell, 1 p.m., GDP Thursday, and the rest of it I just explained. Let's move on. Any questions now? Good. All right. I'm going to show you a couple of charts. We're going to whiz bang through it, and we're going to keep this, for once, we're going to keep this short, maybe within 40 minutes. All right, so everyone can see it. I'm going to start backwards, the long-term picture to the short-term picture of what is going on. We know the stocks that are working. Before I get into this stuff, look at stocks that are working very strong in a bad tape, good tape, whatever tape. Focus on the HMOs. They've been on fire for a couple of weeks. 2-3 months, they're really picking up speed. Humana, United Health, Anthem, ANTM. Then you look at a couple of other biostocks which are coming off the bottom. Allergan, and a few other names that I throw out there. Alexin is one of them. Then a couple of other spec names. All right? There's a lot of big things that are happening. You don't always have to focus on Netflix and Apple and Amazon and Google. That's one part of the picture. Then you look at these ones, which are more of the swing trades, the one I just mentioned to you. They're all on my Twitter feed. Go through it. It's all about making money. Boeing, doing great. It's going to hit $400 soon. When the first announcement comes that the first 737 is flying, the stock's going to be up $15 in a second. It's about to happen. The techs and stuff are still held hostage to the China stuff, and companies with exposure to China obviously are going to be swayed around with every single tweet coming out of President Trump and every single comment coming out of the Chinese government or Chinese media regarding the trade thing. So they're going to be held hostage to that. So they work on a slightly different dynamic. Okay, let's focus on the charts right now. Number one. This is your long-term chart of the stock market going back to 2008-07 when the housing crisis started and the whole collapse and the heavy-duty mini depression that occurred because of the crash in the housing market, which caused the crash in the stock market, all interrelated, but that culminated into the rock bottom 666 type of number on the S&P 500. Back on March 9th, still remember the date, March 9, 2009. Since March 9, 2009, we have had each of these candles are 1 month. We have had multi-month rallies, 2-3 month corrections, multi-month rally, 5-month correction, multi-month rally, 2-month correction, long multi-month rally, and a 3-month correction. 2016, President Trump gets elected November. That was right here. This was June 2016. This was the Brexit debacle, which is still kind of out there in a more altered form, monitoring it. And time to time, that heats up and rocks up the market a little bit, rocks the market. But I don't think that had that much of it. It's kind of getting watered down, this fiasco with the Brexit stuff in the UK. This was November elections right there. President Trump gets elected right there. Okay. This is where we went up multi months, and then correction 3 months, almost 2 months, then the big fat correction. This what was it, October of 2018, monster volatility, monster correction. This is where we are. So let me move all this stuff up. You look at this here. This doesn't look like a, looking even at the stochastics and looking at where we are, to me, based on the technicals, forget my bias and my belief in U.S. exceptionalism, and that we are going to do the right thing despite all the difficulties that we're facing, and that despite everything, the Trump administration is going to deliver the goods, because it's all about delivering the goods. That's what it is. Life is about, are you delivering the goods or not? You guys ask me, hey, is he giving us trade laws that's making us money, or is he just telling us things not making us money? So if it wasn't, you guys wouldn't be here right now. So obviously I'm delivering the goods in a very, very big way. That part I'm not going to shy away from. So is the market delivering the goods? Yes, in my opinion. To me, this is a very large multi-year macro head, and I talked about this months ago, that we would come back and test this head and shoulder, because there's your head, there's your left shoulder, there is your right shoulder. We didn't quite get to the right shoulder. We kind of got there. This time round, we could have gone to 2,700, but I still, let me just clean this up. This is your head, and you better know what inverse head and shoulder is all about by now. And this is one shoulder, another shoulder, another shoulder. So you got the left shoulders here, These are multi-year stuff, the long-term picture. This is the right shoulder, RS. So far, what it looks like, the market wants to bust a move up into severe overbought level on the monthly side, get up there in the low 3,000s. Believe me, it can happen. You get a China deal, I've already showed it. We're going to bust a move about 3,000 on the S&P 500. We get to 3,100, and at that point, we're on top of this rising wedge. You see that? Right there. And then we can take a nice correction, come down below 2,900 again, and then move our way up before we get up to maybe a very euphoric stage of 3,200 on the S&P. Now, let me explain one thing to you about behavioral finance, behavioral science, behavioral investing, which relates directly to technicals. People, the average person out there, wants to believe very badly that the stock markets are great stuff and they want to be in there. But every time they've really put their toe in there in any meaningful way, the market has corrected. Why? Because they always come in at the top. They never come in here. That's the reason why trillions of dollars rush out of the market right when we are at the most extreme oversold, right when we are showing McClellan oscillators at minus 500, and every single metric that we look at, all the other different indicators we look at severe oversold conditions, the average Joe out there is just so petrified. Even traders, RET traders, retail emotional traders, they're just petrified, so they don't buy. It takes time for the market to train your brain, the average person's brain, to think, okay, it's all right now. Okay. The devil's not going to come out. The boogeyman is not going to come out. just going to appear and hit you again. So the market keeps on pushing up. Charts to change your mental calibration, not ours. I'm talking about the overall sentiment in the market. And by the time the sentiment is well sewn in that, yes, the market does have legs, that's when you get to the top of the rising wedge. Just the way on a falling wedge, you have the negative sentiment and the hardcore dogmatic bears start to push in right at the end, and then you get that big breakout, like I projected, 2 weeks ago on June 3rd? Before June 3rd, what was going to happen, and look what the markets are, 1,200, 1,500 points up higher from there. The same thing happens on the opposite side as people start to get more comfortable, and bang, there comes a correction. The correction is not the end of the world, but here they go again. Mom and pop enters the market, at above that 3,000 level. The media is like, wow, look at this. The markets are good, blah, blah, blah. And by that time, technically, things are so severely overbought, the machines go to work because the machines have no mercy. The algos, the algorithmic high frequency traders, the volatility creators, you think they care about mom and pop? No, they don't. Okay? They just want to take your money right, left, and center. That's the reason we fight them, we beat them. But they're not in the business of helping you. So those machines go to work and they just swipe in and take the money. Mom and pop's like, here we go again. Same story starts. So it's a behavioral cycle that continues. So it takes a little bit of time to set in that comfort stage. So that's the phase I believe we're in right now. Futures are up about 6 right now, and we're going to look at that in the long term, in the short term charts coming up in a few minutes. That's it. So that's your long term picture. This is still looking good, and as far as I can see, again, this is an inverse head and shoulder, even on the stochastics, that we're going to bust a move up here within, who knows, maybe this week, or at least by the first week of July. Remember, the markets generally do not crash before July 4th weekend. What day is July 4th? July 4th happens to be next Thursday. Next Thursday. I believe the turbulence starts by mid-July. By that time, we'll be very overextended. So mark those dates. And every time I've mentioned these type of things, you've seen they have been correct. Okay, let's move on. We're good with this? Any questions? Trader and Mike? No? Okay. Stop me if you have any questions. Let's go back now. So this is your longer term picture. You want to see what it looks like projecting out. And again, you don't need to pay some Goldman Sachs advisor millions of dollars, thousands of dollars to show you this. We're showing you this here. All right, for 70 to 90 bucks a month. I'm telling you straight out, this is serious stuff. At one point, the market is going to get to the top of the super cycle, which is going to be around that 3,600, 3,500 S&P level, which is probably going to be Dow 30,000 plus. Dow 30K plus is going to be up on that upper end of the channel. And it might happen this year, believe me. All right? So this is where we are right now. We're going to move up towards that level, pull back, zigzag around, probably fall back a little bit. Is there a chance to fall to the bottom of this level? Sure, anything can happen. If things, hell in a handbasket, there's a shooting war between us and the Chinese in the South China Sea, all hell breaks loose, we are going to go down to the bottom at the end of the channel. And it's going to be a superb shorting opportunity, which will deliver some humongous profits. But I don't wish that, because that's going to hurt the American economy, and certainly not going to benefit anyone. But from a trading opportunity standpoint, it'd be huge. In the meantime, I think the market creeps up, stays about this level, and you can see that. And basically, I'm projecting 3,000 to 3,200 on the max on the over the next month or two. On the bottom end, we know what the levels are: 2,700, 2,800, and 2,900. Just remember that. Great. Any questions? Yes, no, maybe?
No.
Okay, sounds good. I'm using it as a sounding board there, trader. So, All right, yeah. Let's move on. So this is your big picture. Let's look at let's move back now and look at the weekly picture. So the weekly picture is also looking pretty damn good. And I told you all, follow the stows. All right, follow the stows. You don't need to, if you just focus on this and specialize in reading the curvature and the crossover up and down in the stochastics, you're going to be the best swing trader ever. I'm telling you right now, you're going to cut out the noise, and I'm still working on that. I have a hard time cutting out the intraday noise, even though I talk about it, but it still keeps me on the long side of the picture. If you cut out the intraday noise, just imagine how much more money you could have made. And what is intraday noise? Not your stereo blaring or some loud car out there. The noise is all the volatility incurred by all the minute hourly news that hits the markets every single day. That's the noise. Okay? And that just messes with your brains. So if you imagine cutting all that out and just stuck to the weekly charts and follow the stochastics, still curving up, crossover, all that stuff that happens on a technical basis, certainly getting overbought here and hitting those levels. So we're looking on a short-term basis, we're looking at, again, 29.90 on the upper end of the scale, possibly 3,000. So saying all that, that's your weekly chart. You can see that still looking good. This is still a bull flag. So before you go to bed and you will put the stock demons, away, you just say, I don't want to hear those little voices in my head. I just want to look at this chart and say it's a bull flag. Okay? A bull flag is the scariest thing a dogmatic bear can ever hear in their head. A bull flag. All right? So that's what it is. But the sweetest words you can hear when you're short or a dogmatic bear who always wants the U.S. economy and the markets to crash wants to hear is a bear flag. Well, there ain't no bear flags I can see. All right? This is still a bull flag. And the bull flag will most probably break out today and hit around 29.90. So we got a little bit more room to move, 200 points or so. All right. Whose noise is that in the background? Is that Trader or Mike H? Robbie Trader? Okay. All right. So this is still looking good. This is the weekly picture. We're good to go on that. Let's go back now. Look at the daily. This has more noise because each of the candles are daily, and so it has more affected by what happens on an intraday basis with the stock market. The daily picture is still a bull flag. I'm not kidding. This is still a bull flag right there. You can see that. We had a big substantial move off this falling wedge that I called 1 or 2 days prior to it happening. As you know, humongous opportunity, huge breakout, monster rally. And remember, the confirmation kicks off mostly on the third day after the first day, second day. Second day was humongous. I told you, when you get that type of candle, yes, you might get some back and fill, but the market wants to go high. You don't get these type of candles off some substantial support. At that time, it was around 2,700, 2,720, and tell yourself, oh, the market's just going to crash and burn. Sure it can. Sure it can. But generally speaking, if this happens, and it happens with stocks too, you get this massive falling wedge breakout, both on the underlying internals, the stochastics in this particular case, and on the external, on the candle, it is a win-win situation. So you go up hard, then you have 3 days of consolidation where things get a little dicey. Consolidations, it could have fallen a little bit more, but it held the 50-day moving average. This is a big, thick red line here, and see you later, creating another bull flag going into this critical week. And I told you that, and remember, don't forget what I told you and what came right. Gotta obviously, remind you all. I told you monthly OPEX, monthly options expiration week, which was last week, is huge. It's very positive. And boy, was it very positive. It ripped the heads out of the bears. All right? It was super positive. And Friday was just all the quad witching, quadruple witching, which is basically the witching on with stock index futures, stock index options, stock options, and single stocks futures. They expire simultaneously. That's why you got that drop at 3:45 p.m. That quick, sharp 50-point drop on the Dow. And now that's been taken up because futures are up 7. And we're going to see that on the charts. The magic of technical charts and how I construct it and show it and deliver it to you people. I know it might take some time. Some people catch it onto it faster than others. It is almost magical. I'm not kidding. It amazes me. Not what I structure and stuff. It just amazes me how these technical patterns work. It does. And if it doesn't amaze you, that means you're not doing anything worthwhile in the market as in trading. End of story. Okay. So now we have a bull flag, this candle here that you're seeing. This is how we closed on Friday, right there. I had an important appointment. Remember, I left around 3:15 p.m. and 3:45. You had that quick drop. Our stocks were doing okay. We did very well. But I looked at it. I smiled. I said, good. This was still a dragonfly doji. Look at that, right? The doji candle. And this is it right now with futures up 7. So looking at the daily picture, it looks like it wants to bust a move again over the previous high. And that should bring us up to, like I said, max move I'm looking at is 29.90 as S&P futures traders. We're looking for another 200 points and 29.90 around that level. Maybe we cross that over and kiss that psychological 3,000 level on the S&P 500. So all the financial news networks, CNBC included, Fox News Network, and Bloomberg, and everyone starts screaming, "Oh my God, look at this market! It's just amazing. It's at 3,000 right now. Nobody expected it. The shorts are going to get bamboozled again." And at that point, you're in that technical euphoria zone, if you ask me. But this is what we're looking pretty good. Remember, you can stay above the 80 mark on the RSI and the stochastics and you keep on moving sideways. That means the market is strong. I've said this before, reminding you all again. Let's move on. Next one is a picture of your daily chart. This is what it looks like. It is a rising wedge, upper end of the rising wedge that the market normally gravitates to. Doesn't always hit the top of the rising wedge, but even if it gets to the upper end of the rising wedge, we are looking at around 29.90. And the topmost end of this rising wedge is 3,000. Can we get to 3,000? We get some sort of a strong framework of a G-20 deal, couple of strong comments, one tweet out of Donald will do it. That he's really looking forward to this, that they had some private conversations ahead of the G20, the S&P is going to hit 3,000. End of story. So stay long, manage your profits intraday, but do not try to short this market in any meaningful way. You want to be a quick short trader, market is dropping 60 points, you want to make some money in 15 minutes, that's up to you. If you're fast enough to do that. Sometimes it's too fast, I can't even do that. Bear with me 1 second, guys. Take a good look at this chart as I zoom in. This is going back to May. This is where we are. And this is what the pattern looks like. A very large V, which will bust a move up here, cause massive technical euphoria, and then pull back. Take a look at this. Okay, I'm back. Now, where are we? We are in the 1 hour chart. This is your day and swing trading chart. This little drop was at 345. Starting at 2 o'clock on Friday. We're going to look at that on the next chart. Here's your 1 hour chart, still looking good. Remember, rising wedges always correct. So will it correct from here down here? There's a good possibility that can do that. Or will it bust a move first and correct? But one way or the other, it is going to correct. And that correction will be fast and furious. So you got to keep an eye on things. There's nothing around it. You put a stop loss too close to your options, they're going to take it away in 1 second. You got to put a stop loss if you want. I put manual stop losses. That's the best way to do it. Somebody out there on Instagram put it out there. You put that stop loss out there, those algos have you as marked. You're a marked man or woman. They'll take you out. You put a manual stop loss, you want to act on it, don't want to be heavy on your position size, but you just still want to get out, fine. Then manually go in there and sell it. If you have a reasonably good size position, and remember, you're not the only one, others are replicating the same thing, and you put in a stop loss position out there, automatically, they see it, they will take it out. Both in stocks and in indices. But no harm putting it if you'd like it, because if you can watch the screen. So there we are. We know what the supports are, and we know that this rising wedge, once it's busted a move, it might do this, or if it even comes to the 29.62 level, which we are 4 points away from, futures are up about 8 points right now. So that means they might just get to this green line here, the previous highs. And remember, we went above the previous highs. That's why you get that spike. It can go here and then make a move down here. So that's very possible by tomorrow morning. Remember, Chinese markets are open right now. That's your hourly chart. Use it effectively. Now, this is a new chart created to show you what happened since the 20th. The 20th was Thursday. The 20th was Thursday, the day after the Fed meeting was on Wednesday, which was the 19th. So the Fed meeting, the Fed rally started, if we want to put it in context, so here was, let's put this in context, okay, so you understand what's going on, ladies and gentlemen. So here was the Fed meeting, all right, 2 p.m., right there. Told you there was a good possibility of that happening, walked you guys all through it, bang, shot up, kept on going, the market closed around here. Futures ramped up the next morning. I was like, whoa. I mean, I expected a positive reaction, not futures up 20 plus points. Why did that happen? Well, one, because the Fed was very friendly. Jerome Powell did the right thing, said the right things. But more importantly, the short funds just panicked. They were like, WTF? Like, what the F? Like, holy cow, we got to get out. They got short squeezed to kingdom come. Big time. So they got short squeezed hard. That's why the futures just exploded higher. And then quad witching, remember that? Futures exploded higher. And then right when the market opened, sellers stepped in. Is it very predictable? No. But it's just the way things happen. Once they printed a bottom at around noontime, right around the European market close, huge rally ensued. And then the market stayed within a nice range, creating a high, a new all-time high. This was, by the way, the 20th. This was the following day, Thursday. So you got big move up, and then the move down. But this was Friday. I'm sorry, this was Friday, and then you had, so there was a huge burst of energy, lots of profits to be taken. That's exactly what happened. Then we fell within a range. And then on Friday, we printed a high. On Friday at 11 a.m., we printed a high at around 29.70, which I had talked about before in my previous webinars, all technical levels. Once you hit that level, there was no sustained buying. The market needed a rest, came down, did all this stuff, and then at 3:15, at 3:45, quad witching, you had two large dump programs. Didn't change anything. It just stayed within this range, and look where we are right now. This is after hours right now as we speak. Futures up 7.5, 8 points. So these patterns are very clear on my charts. So we're gonna, if things work out and we wake up tomorrow morning, we hit that 29.64 level. What do you think is going to happen? They're going to sell the market again. Will it fall all the way down here? I have no idea, because that's almost a 20-point drop. So that means the market's reverse 140 points on the Dow. Will it be that extreme? I don't know. But I know that there's a downtrend line here, there's an uptrend line here. If the market wants to remain very bullish, it'll move up here. By the time you see the futures in the morning, then it comes down, stays within this ascending triangle. This is a AT, or ascending triangle. Okay, this is what an ascending triangle looks like. So it can come down, whistle around, and then the market busts a move again to test 2970. So these are extremely powerful charts which are giving you the path. I can't predict what's going to happen every 15 minutes, but I do have a high probability of predicting that up or down which way they're going to go. But I can't tell you exactly whether the algos are going to print a move like that or whether they're going to print a move like that. But I can see with the candles, with my eyes, so can you all, whether or not it's going to bust a move up towards that level. But so far, it looks fine. And I've shown you all the other charts to show you what a bigger picture of the market is, which is still higher. Finally, the 15-minute charts are here. This is the not just day traders, but people for managing their profits. This is the daily guidance chart. This is the chart, like I said to somebody else earlier on one of my sessions, is the one that keeps you somewhat sane. This is the no freak out charts, like don't freak out, relax. You don't need to jump out your first floor window or fall off your chair. Just look at this chart and you get this sharp sell program comes in. You know what the ranges are. It's all there. If a range breaks, that means there's some big mini flash crashes beginning. But this is the chart which keeps people during the day, and so is this one. But this is the one that keeps traders during the day stable. So that's basically it, ladies and gentlemen. I don't want to extend this session too much. I covered quite a few important points. I will entertain one or two quick questions. I will show you a chart of one of the strongest stocks in the market right now, Humana. I've been talking about this for weeks now. Now it's really gaining steam, and I am looking for. Now these are HMOs. These are HMOs, health insurers, period. Let's start off by looking at the weekly chart. Extremely bullish. Everything that I talked about from a couple of weeks ago and from the last week on Humana, stochastics are moving up, breaking out beautifully, getting, wants to go above the 80 marker on the RSI. This is one powerful candle. We did have one other powerful candle like this, but this one, the difference between this candle and this candle is what? Can somebody tell me? Just take a look at it. I think you can see it. Okay, so this is your weekly chart. This is for swing traders. So the difference, there was a big candle move, right? It was up $12, huge. It was up maybe 8 or 9 at this level. So what was the difference between this? Make sure that I'm looking at it the right way. And this. Let me see here. I'm expanding it. I'm expanding it. I think I need to rephrase the question. There's no really, what the biggest difference is, what is the biggest difference between this candle and this candle? What did this candle do that this candle hadn't done? It's pretty simple. Let me just squeeze back so you can see the picture a little bit more clear. I know you know the answer because I believe you're trading Humana, aren't you, trader?
Yeah,
There you go. Tell me. What did it do on Friday?
Breaking out to a new short-term high.
That's not a good enough answer. You know, what is it technically doing? I know it's making a short-term high. Here it was making a short-term high too. But what did it do here, which is absolutely pivotal for a technical trader, saying, that's it, I'm getting in. And we've been in there before, but I'm just saying. It broke this very large downtrend line. There you go. This downtrend line starts off all the way on November of 2018. Okay, November of 2018. Look at this downtrend line. This downtrend line was taken out with one fat, large volume, heavy volume, bullish engulfing candle. That is plain old-fashioned bullish. Okay, that's how you got to look at it. Yep. So at this point, you're looking at upper end of the channel, which is 276, and this 150-day moving average, which is a critical line at 277. The other thing that's happening here is a crossover of the 34 and the 50-day moving average just starting. And if the crossover starts to accelerate higher, you know what happens. The stock is going to be sitting at 290. Big money trades. There, it's just starting. See that 34.50 crossover starting? Number one. Number two, broke out of a long-term multi-month downtrend line. That's huge. Understood?
Yes.
Exactly. Anytime you see this type of pictures, and remember, this is not like a teensy-wincy little stock no one knows about. This is the New York Stock Exchange, multi-billion-dollar company. What's Humana's market cap? Let me look it up. Humana's market cap is, whoa, 36.5 frigging billion dollars. So you're talking some serious weight here. Now, part of it is technical. I believe they have their ex-dividend date, and they'll be issuing the dividend, which is a nice dividend, 0.81%, $2.20. The yield is, yeah, wow, the dividend is $2.20. Not bad, 0.8%. And so this is very important. It's just starting to cross over. Overall, the downtrend looks like short term it's broken. It is it stayed well above the 50-day moving average, and so that's a good thing. So anyway, you got to play it in increments. Every time it goes up $3-4, sell the previous calls, buy some rollover, and buy some $2-3 out. That's pretty much the way you do it. You don't necessarily need to sit on the original calls that I told people to buy, which I remember with the 245 calls. So if it's at 270 and you're still sitting on the 245 calls, that means you got a chunk of profits that you have just not realized. Remember one thing about realized profits, unrealized profits. Realized profits are what you're seeing on your screen, on your account, and you're like, wow, look at that money just sitting there. Well, guess what? You get one bad day, that money gets wiped out. It's that realized profit, the unrealized profit, because that's what's on your P&L, and you didn't realize it. How do you realize a profit? You realize a profit in simple English, you sell it. Okay? You sell it. So you didn't do it, and the next thing you know, that profit's gone. And that is the worst feeling for a trader. Now, we've all gone through it. So just roll over the options to higher strikes, but very, very bullish picture. Another one is United Health. And this is not the first time I'm mentioning it. Another bullish picture. We've been trading this stock all the way through. And these guys have short drops too. They'll drop $5, $6, $7, in a day. But look at this pattern. What is this pattern? Any one of you? What is this pattern here?
It's inverse head and shoulders.
Bingo, A+. There you go. It's an inverse head and shoulder, and a very defined one. There you go. And there's your first neckline. It's slightly above that. That's your main neckline at 260. You bet it goes to 260. I think, well, unless Bernie attacks, like the whole healthcare industry again. But anyway, it doesn't really matter. The fact is that at that point, there has to be some selling. But if it busts a move over 260, the stock is going to go to 275. This is stock talk. I told you the big technical picture on the market to keep you all focused. This is stock talk we're talking about. So these are the type of swing trades you want to focus on. Aside from all the other trades, like the Netflix and stuff, you can make 30, 40, 50%. Amazon calls, we buy them at 80 cents. We sell them at $3, $4. I know, trader, you've done that, I think, once or twice with me, right? A couple of times.
Man.
Absolutely. Yes. You just got to be fast. You buy a little bit, boom, let it go. And then you're like, why didn't I buy it more, right? I mean, look at these booking calls. I give it to you guys like at $3, $4. The thing goes to 18. I want to rip my hair out, okay? And say, why didn't I buy 10? Instead, I buy a smaller amount because, that's just the way they are. So those you can certainly do. But these are the ones you have a little bit more of a swing, high confidence ratio on the swing trade side. So saying all that, let's take a look at ANTM. ANTM is another one. ANTM Health, another powerful chart. All the way from 232 to 290. Think about it. So this one is at the neckline. should meet some resistance. I would be a buyer of this one a little bit lower, maybe 3, 4, 5 points lower. I believe that it does this and completes the pattern at 310, possibly at 320. Again, another major inverse head and shoulder. Well, in a larger way, it's a larger head and shoulder. This shoulders, the left shoulder being higher than the right shoulder, kinda. So this one again is another good one to look at. So anyway, just wanted to highlight this stuff. We want to take a look at, I still like Netflix. So Netflix I like purely because it's a range trading stock. Forget about what happened in Netflix around here. Just focus on what is happening here. You have a range on Netflix, ladies and gentlemen. I even highlighted the range. The first upper end of this range is right here, right there. I marked it for you all. These numbers, whenever I put them, that means you have to focus on them, right? So 386, the lower end of this range is 332. That, ladies and gentlemen, is roughly 54 points, right? 54 points, 54 points. I repeat, 54 points. Netflix must have moved. You'll just see it just another analyst upgrade, whatever happens, good day, China trade, which had nothing to do with Netflix to start with. The stock will hit 386 fast. So it's a very range trading stocks. You trade the ranges. You trade the range between 340 and 360, then 360 to 370. And then as you can see here very clearly, it looks like everything that is showing, the stochastics included. And again, it's a highly volatile stock. So if you're up $6, $7 on it, your options are up 100, 150%. Sell it, roll it out to the higher strikes. One thing I like about Netflix is the options are not prohibitively expensive, like Amazon. Pretty damn expensive, okay, unless you buy it way out of the money. And if it doesn't work, they expire worthless. Apple's cheap options, but Netflix is reasonable. So this one is telling me that we got room here to move towards 380. Any other stock anyone wants me to quickly look at?
AGN.
Yes. So I like Allergan for fundamental reasons as well as technical reasons. I like the fact that the stock, which has been heavily depressed for months and months and months, now has an activist investor in the group. I read that. I believe I posted a news looking to push Allergan to unlock value. What does that mean in simple English? It simply means they need to sell some of their divisions, period. They are the makers of Botox, which is the biggest money maker. And they are looking, they have I can't remember. They own some big name in their portfolio, big name companies in their portfolio. So I'm looking at purely from a technical standpoint. Allergan calls are cheap, and here we have a big downtrend line right there, right there. That downtrend line is right extension on. Okay, good. That downtrend line, ladies and gentlemen, and this is a multi-month one, right? This is from October of 2018, right? October of 2018. What's the date? Yes. That downtrend line is at 137. The 50-day moving average 135. Here's a simple trick, okay? Big name stocks like this, if they fall way out of favor and they are well below the 50-day moving average for a couple of months in a row, they generally will try to go back and touch that downtrending, I repeat, downtrending 50-day moving average. So you can trade that. So the 50-day moving average here is $135. That's $4 from here. You're going to make some real decent money because we were telling people to buy the stock at around 129, 130. You can make $5 on this. Now, once it hits the 50-day moving average and above that, the downtrend line, we don't know what's going to happen. If it busts a move, the stock is going to go to 155 so fast, your head's going to spin. But we don't know whether it's going to do that yet. But it certainly looks good because on expanding volume, you have 3 marching soldiers. That means 3 fat green candles. And now this little candle, this little, zoom in 1 second. Let's zoom in. On a red day in the market, we had a hammer. I have the other chart, which is beautiful on Allergan, which shows you the cup and it shows you this one. This is more of a trading chart. That's more of a swing chart. This one, right? Focus on this. It's very nice. Not just the colors, I mean the chart. I'll show you to you why. There you go. Okay, so you got a nice move higher in between, red days, little ones, powerful move higher. Then you have a nice bull flag consolidation, and end of the day, it printed a nice little move here, looking like it wants to bust the move to 133. I've marked the levels specifically. Why are these levels marked? Because that's where the supply came in, i.e. the sell programs hit 133. Other one is at 138. But if the pattern completes, the stock will move its way up towards the 138 to 140 level, which is a gap. And this is your 1 hour chart. Very, very precise. Now, on the longer term charts, I don't know what the whole story is going to be, but if it plays out, it's going to complete this pattern. It's going to basically complete this pattern at and I'm not an Allegan trader per se, but I'm liking what I'm seeing purely from a technical basis. This is the pattern. This is the level the stock really broke down from. So if things really go right, then the stock will hit 165. The biotech index, for the first time in a long time, I showed you all, right? The IBB. Why did I do that? Because these Allergans, these big name companies, which are in the biotech index, Alexon, Regeneron, Biogen, BIIB, these things are all in the biotech index, and the biotech index is starting to move its way higher. There. So that's telling you that there's something happening within that. I know what's happening. The M&A is happening, lots of mergers and acquisition, takeovers and such. Last two things that I need to quickly. AMAG, is that what you want? Mike H wants me to look at AMAG. What is AMAG? Or AMAG Therapeutics? I don't know. I mean, the charts looks like dog poop. Let me look at the weekly. Wow. I mean, chart-wise, it's a non-technical chart, but at the same time, it looks like it's at the historical lows. So if anything happens, looks to me like a falling wedge. If I want to put a bullish spin to it, looks like a falling wedge. So if things, even one spur of good news, the stock will move up rather quickly. Otherwise, it'll just vacillate around here. But if this is a weekly chart. So if the weekly chart, you can draw a downtrend channel, which measures down to about 7, or I can attempt to draw a falling wedge right that with a low end around 8, and any type of good news pushes the stock up, it's going to break above 10. So that is my take on AMAG. But it is not from a technical standpoint, Mike, it is not a stock that you can really trade on a technical basis yet, till we see some movement on the candles. So let's take a look at the 1 hour chart and try to detect if there's any movement. Wow, the stock was at 10.02. How come it didn't show up on the daily? Oh, it happened after hours, Mike? That's strange. Okay, so I guess it happened after hours on the news. So now that it's crossed over 10, which I just explained, that any type of good news will push it above 10, and I see it at 10:40. So this must have happened at what time? It happened at 5 p.m. on Friday on type of news. Okay, so in that case, let's go back to the daily. So at this point, we have the stock, as I explained to you all, is on a, I drew a fall, I showed you a falling wedge. Now that it's above 10 right now, we do have movement where the stock, there's a gap fill here, can go to 13. So now that news came out, whatever it came out, I don't know why the news happened. Mike, why did AMAG move after hours at 5 p.m. on Friday? Okay, you can type it in. So anyway, so you got movement now between 11 and 13. Oh, they are the female Viagra company? No kidding. All right. See, things I learned. So bottom line is, then the stocks got juice, because that's a headline. Okay. So yeah. So in that case, we will definitely be covering it tomorrow. Thanks for bringing it to our attention. And so we're looking at the gap fill around $13. Can happen rather quickly on this stuff. So this is the female Viagra company. and AMAC Pharmaceuticals on our list, thanks to Mike H. And we are certainly going to be looking at that. You want to buy long dated calls on this if there's because these things take a little bit of time, but the stock will move fast because it's cheap. You can buy the common, or you can buy some long dated calls going into July and August. Two other quick things I want to show you from a market standpoint, which I always do. One is flashing a little cautionary sign short term because it's overbought. That is our New York McClellan oscillator, which I've always said buy when it is at when it's down at these levels, right? Minus 59, rally's coming. 24 to 48 hours, minus 65, buy. Now we are getting up towards, we got up to 54, so we got a little bit of a sell, right? But look where the Bollingers, it normally goes to the upper end of the Bollinger. This is your Bollinger Band right there, the green line. It is at 73. See, got to read it. I mean, that's how I read it. I've been looking at these things for years. Is what it's telling you that there is enough juice on the market for that one big move on any type of positive China development into the S&P 2990 3000 level, and this will print up in the 60 to 73 range. That's going to be extreme overbought. Time to recycle, reset a little bit, and then re-enter the long side. So this is telling me, looking at the surge in Bollinger, which is now pointing at 73, that we could do it. This is still surging forward. That's a very positive sign. This got overbought, so it's slightly dipped, but look at the Bollinger Band, 73. So that's how I read this chart. We could get extreme overbought, plus 73, just the way you get extreme oversold at minus 60, minus 66, minus 66, and forget minus 110, where you just blind, you just put in money. But that's so you understand that. Now, let's take a look at the weekly. Let's say you want to project that and say, forget about the short-term stuff. The weekly chart is telling you we're going higher. Why? Just look at it. First of all, upper Bollinger is at 62. We're at 30.83, still pointing higher. This is the most critical part. We are on the second histogram on the weekly. We could easily continue for another 2 weeks, which makes sense because we continue towards first week of July into July 4th. Makes total sense. The stochastics are still crossing over higher. You all see this clearly, right? On your screens as I'm showing you?
Yes.
Yeah. This chart is not proprietary. You can actually set it up. Ask me sometime and I'll show you. I use some parameters to set it up. So you just go to stockcharts.com. It's not real time, so I look at it at the end of the day, which is good. I don't want to look at this chart in real time. So this is positive. This is the weekly version. This is positive. Upper Bollinger is 61, 62. Just the way I told you, we have room to move. Last one that I'm going to show you before we sign off is the SPX 533, what we call the swing chart. This is the directional bias chart. This is short-term overbought. I repeat, short-term overbought. So get ready for 50, 100 point type of swings within the range that I just showed you all. So be prepared for that. This is on the daily chart. We hit that almost 100 range, so it's starting to point down a little bit. This stochastics crossover is still intact. There's no signs of a curl down, just the way this is your first sign that the market's going to pull back. This is solid. Histograms are still growing, so this is a plus. This is a plus stochastics. I'm talking about internal indicators. As in RSI or relative strength, meaning how overbought the market is, it's a negative, short-term negative, which could be a couple of hours during the day. You get that quick pullback. Let's take a look at the weekly to see what the slightly longer-term picture in the first part of July is. And ladies and gentlemen, it is beautiful. It really is. I mean, what can I say? Look at this. Last time this happened was in December, after December 24th. We continued for weeks and weeks. And we're just on the third week of this move. This one continued for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I'll stick to 10. Till 10 weeks, the markets rally. We're just on the third week, ladies and gentlemen. Now, what does 10 weeks brings us? Anyone tell me quickly, what is 10 weeks from today? 10 weeks is basically,
Labor Day.
wow, you just gave the answer. So what date is it?
September.
Bingo. So we basically, after the minor correction and stuff, we rally for 10 weeks into Labor Day. I wouldn't be surprised. I'm dead serious. Because that correlates with this 10 weeks. Thanks, Mike, for providing that information. So yeah, if we have a 10-week rally similar to this pattern from December 24th, then we go into Labor Day.
September 2nd.
September 2nd. Thank you. September 2nd. So we rally till early September, because Octobers are always tricky. We know that. Always a pullback. So for reasons I've explained many times, and many of you know what those reasons are, and I'll tell you next time. So Labor Day weekend, we rally for 10 weeks. Now, does that mean it's going to be a straight line rally? No, it's going to be this way, that way, but we are going to be overall weekly trending higher. I think it's possible. This is definitely positive. Look at this. It hasn't even reached this heavy duty overbought level. And last time we had a 10-week rally, it stayed overbought for weeks and weeks. Had a small corrective action and then continued for another 1, 2, 3, 4, 5, 6 weeks. So you're telling me this can't happen? Sure, it can happen. We can continue for a couple of weeks, dip a little bit, quick, sharp correction for 1 week, scare the living daylights out of everyone. Look at the whites of the eyes for all those fantastically ignorant reporters, all financial reporters all around the media, okay? All channels included, and then see and have them all scared out of the daylights, mom and pop just fleeing out, into the bunkers again, and boom, that week's over, and then the rally starts towards Labor Day. Can happen. This is just gone positive. This was the first week we went positive. Remember, we didn't go positive till the fourth week. 1, 2, 3, 4, fifth. We had 5 weeks of a massive rally from the bottom back from December, and then we printed the first positive histogram. Think, here we just printed the first positive histogram in tandem with, we rallied for 2 weeks hard. 2 weeks hard, we're still negative. We just went positive. Why can't we go create a few other histograms like this, which means 1, 2, 3 weeks. Each of these histogram candles is 1 week. Now, things can go wrong, and we can just go a little bit more and go back into negative territory. Well, if that happens, then everything is going to reverse. We shall see. But if it even follows part of this pattern, then we have a couple more weeks out. Then we get a correction, and then we get a couple of weeks up again into Labor Day. Let me just point out one last thing. I'll leave it at that. Okay, ladies and gentlemen, this is serious stuff that I'm giving you guys, like I do every time. Some webinars are more serious than others. A lot of people have missed out on making any substantial money or any money on this humongous rally that has ensued for basically emotional faults of their own and their stubbornness not to focus on charts, period. Some of you have done extremely well because you have blindly believed in all these charts and said that, okay, this guy Frank knows and he's just going to do it. And it happened. Great. Congratulations. Here's the best part of the news. Many of you who have basically done nothing, this is your chance to prove yourself that you can do something. Okay? I repeat, many of you who have done nothing on the first leg of this rally, the beauty about these weekly charts that I'm showing, it's showing you there is room for movement higher. So if there's room for movement higher, don't make the same mistakes again, please. Cry like a baby, Actually, babies are smarter than us. There's a joke, forget about that joke, but seriously, it's time to grow up. It's time to grow up. And the only way you grow up is try to be more tactical and less emotional. Markets make grown men and women cry. Since my days on Wall Street, I've seen that. All right. This is one thing that the strongest guy and the strongest gal can break down on. Don't be one of them. The other part is that that's basically it. So we have room to move. It is going to be volatile. Let's be ready for it. But let's take the opportunity that when we get those tactical pullbacks, and if the uptrend is still intact and all these great stuff that I show you, don't freak out. Buy there. Buy just like the Warren Buffett thing. Except Warren Buffett never told you when exactly to buy. He just said buy when everyone's fearful. Great. So when do I know everyone's fearful? Everyone's been fearful since 2009. So that doesn't really count. Warren Buffett is not going to make you rich. Why? Because he works on a different plane. He's a great guy. You want to be wealthy from a trader standpoint, you gotta trade the charts. Buy when everyone is fearful is just a generic term. What does that mean? Why when everyone's fearful? Everyone's fearful every time the market drops 50 points. So does that mean that you have to buy the market every time it's down 50 points? No. Think about that before you go to bed. Have a great weekend. Have a great evening. I'll see you guys tomorrow. God bless you all. Let's make it happen. Sign up for the ACS sessions. Working with people, really liking working with all these new people who have joined us. Give us some great referrals. Let's make the community grow. And thank God for everything that happens to us. Please, please, just thank God for everything that happens to us. Because without him, we're nowhere. And secondly, thank and God bless our great nation for what it gives us. Let's make it happen. Good night.
Thanks, Frank.